Canoo to outsource production of its first electric van for Walmart. Canoo Inc. will use a third party to build its first electric delivery van for Walmart Inc. A change from the previous plan to begin assembly at the startup factory in Bentonville, Arkansas by the end of the year. Now, the EV company would score a big win for reaching a deal with Walmart. They will use an unspecified contractor for the initial output of the debut EV van or EV vehicle by the year's end, Tony Aquila says. Tony Aquila, Canoo's chief executive officer, said on Monday on a call with analysts. Canoo announced in July that Walmart had placed an order for at least 4,500 battery-powered vans, with the option to purchase up to 10,000. Aquila said that deliveries to Walmart are on track to start in the first quarter of 2023. The company previously said it would assemble its own vehicles at a small factory in Bentonville, where Walmart is headquartered, while it works on building a dedicated production facility in Pryor, Oklahoma. In a filing in late Monday, Canoo signaled that it has a lot riding on the success of the agreement with Walmart. And here's a quote: "We expect that a substantial portion of our initial revenue will be from one of our customers," the company has said. If we're unable to maintain this relationship, or if Walmart purchases significantly fewer vehicles than we currently anticipated, or none at all, our business, prospect, financial conditions, result of operations, and cash flows could be materially and adversely affected. The decision follows a failed 2021 deal with Dutch outfit VDL Nedcar BV to build Canoo's electric vans. The agreement fell apart, and that was near the end of last year. So at this moment, I think Canoo's just hoping that they don't have another deal falling through the roof. They just need some success for the time being. They just need to start production, even start production in low volume amount of vehicles. But that's better to start production than to start no production. Now, Canoo's second quarter results, like its first quarter results, show a pre-revenue company burning through cash. However, last quarter, Canoo was warning that it might not have enough cash to stay in business. 3 months later, the EV startup gone SPAC is touting access to access capital to see through the rest of 2022. And there's a quote from Ramesh Murthy: "We are preparing for the start of production readiness." Murthy is the chief accounting officer at Canoo. During Monday's call, he was quoted in saying, "We have customers, we have access to capital. We have a strategy that benefits our company and shareholders against the backdrop of this global economy condition. We are making it happen." Canoo says it's closed out the quarter with more than $1 billion in its sale pipeline. This is largely attributed to the recent deal with Walmart to purchase the 4,500 units with an option to buy 10,000 units. Now, it's good if they're seeing a potential sale of up to $1 billion. That is good. But without starting production, without delivering these vehicles, that number is almost irrelevant, as we all know. Now, Canoo also scored a huge deal with its multi-purpose platform to the U.S. Army for analysis and demonstration, which could lead to sales in the future. The company also recently unveiled the EVs making for NASA Artemis mission. I made a video on the NASA Artemis mission regarding to Canoo, so you can actually check that out. It's actually quite interesting. But it's not a big sell for Canoo. It's big for publicity, but it's not big for sale. Now, Canoo is one of those startups, one of those SPAC companies that has had a really tough time, and is likely to still have a tough time in the future, considering the other electric companies who have way more funding and they're having a difficult time. Consider Rivian, who has a lot more funding, but still they had a difficult time. But at least in Rivian case, they have a lot of money to dry their tears. In Canoo's case, they don't have that money, unfortunately. Now, Canoo shares hiked almost 7% after the company's released its Q2 results. Now, Canoo has quite a lot of potential money in pipeline, but that's potential money. There's no guarantee. The company has still net brought any revenue since making its public debut in December 2020. Canoo saw a net loss of $164.4 million in the second quarter and $289.8 million in the first half of the year, compared to a net loss of $112.6 million and $127.8 million in the same period last year in 2021. In Q1, Canoo was struggling to get the cash it needed. When the company announced its results in May, it had already realized the gains of $300 million. private investment and public equity investment from SPAC. Canoo also filed a $300 million universal shelf, all of which would have been necessary to make it start of production. As of the result delayed funds, Canoo issued a growing concern warning. Now today, Canoo is signing a different tune. The company closed out the quarter with an access to $250 million, which include $200 million of unused capital on its SPA facility and cash equivalents of $33.8 million. Notably, while there is certainly access to capital, it's not actually cash on hand, which in reality close to pennies for an EV company. So understand that even though it's cash, this is not enough cash to stay sustainable. This is cash that it could burn through in a quick and timely fashion. Canoo needs a way to manufacture vehicles while making a profit without burning through the little revenue that they have. They need to keep striking deals, that is good, but they also need to start delivering. If they can't deliver anything, then damn, they are in a really tough position. But ultimately, I either see Canoo being bought out by a much bigger company just to get hands on their intellectual properties, like the design of their vehicles, or they need some more funding. And when I say more, I mean billions of dollars. Money that can really propel them to manufacture enough vehicles so they can stay afloat. Now, since these announcements were made public, Canoo was trading above $4 quite impressively since the Walmart announcement. However, in the last few days, the price has dropped back to $3.41. That's just due to the fact of their Q2 earning calls. It was not impressive and people did not like it. It was not looking good for Canoo. So naturally, they lost. So naturally, people started to sell shares. And I'm not surprised by that. When I saw the shares pumping, I was like, okay, this is good temporarily. But I can guarantee you, people are going to sell the moment something negative comes out in the press. So that's it for this video. Hope you enjoyed it. Subscribe to see more. Leave a like, leave a comment. And of course, I'll see you in our next video.